If you understand the market structure, you can make money trading any market. And it really doesn't matter if you trade Forex, crypto, stocks, futures, it really doesn't matter. I'm literally going to be walking you through one chart pattern that makes the most money on these charts. I've made over £50,000 trading this exact pattern, and I'm going to be walking you through the entire process step by step so that you can identify the pattern, learn how to trade it, as well as profit from it. So let's get into it. Welcome back, traders. If you're new to this trading space, I'm Kerry, and my mission here is simple. It is to help you get to profitability way quicker than I did. So if you're on par with that same goal, then of course hit that subscribe button. It don't cost you nothing. Let's get right into today's video. Market structure is simply how price moves, right? So if you're a new trader, I want you to focus on two main types of market structure: uptrend and downtrend. In an uptrend, you get higher highs like this and higher lows, okay? And price goes up, it pulls back, it goes higher, it pulls back, right? It's literally climbing a staircase. Now, in a downtrend, it's slightly different. You get lower highs and lower lows, right? So price is going down, right? As it goes down, it bounces and it goes down lower, right? Bounces lower again, and the process repeats itself. It's like going down stairs, right? Literally. So uptrend, we're going up the stairs. Downtrend, we're going down the staircase. That's all market structure is. Other people complicate it. It's not complicated, right? So higher highs and higher lows equal uptrend. Lower highs and lower lows equals a downtrend. Most traders don't understand this. They look at chart and they see chaos. They have no clue as to what's going on. They see random price movement, but if you understand market structure, you will see order. You will see pattern. And where there is pattern, there is money to be made. And your only goal in these markets is to understand patterns. Pattern recognition is what gives you profit. If you can see the pattern, you can profit from it. That's literally what it is. So I know you're now thinking, what is the pattern that makes you the most money? It's simple. The pattern that makes you the most money is higher highs and higher lows. This is an uptrend. Here's why this pattern is so profitable. When price is making higher highs and higher lows, it means buyers are in control. Every time price pulls back to the previous low, buyers step in and they push it back up. This is predictable. This is mechanical. So here's the strategy. I want you to lock into this. All you do is wait for price to pull back to the previous low, which is now support. You watch for price to bounce off that support. When it bounces, you enter. Your stop loss is below the support level. Your profit target is at the previous high. You hold until price reaches the previous high. Then you exit. Let me show you an example here. Here's a chart in an uptrend, all right? Price makes a high, all right? You can clearly see it here. It pulls back, making that support. Buyer step in, price bounces. You enter. Your stop loss below the support, your profit target at the previous high. Price goes up, and it hits it. You exit, you've made money. If you bought at that level, that's all it takes to make money. Pick the pattern up. That's one trade. Do this 10 times a month. And guess what? You can make 2,000, 10,000, 50,000. That's the power of market structure. So all the strategies that you're out there thinking of, I want you to lock into the power of market structure. Market structure is what you need to understand. Spend time understanding it. Now, if you're a new trader, your question probably right now is, how do you find the pattern, or how do you actually know what market is doing? How can you identify if the market is really having an uptrend or a downtrend when it's doing all of this and it looks confusing? I'm going to give you a simple process right here. Make a note of it. Okay? Your first step is to go to the daily time frame. Go to that daily chart. And you're looking to see if we're in an uptrend or a downtrend. That's it. If we're in an uptrend, the market is going to be climbing higher and higher, and it's going to be very obvious. All right. If we're in a downtrend, it will look like we're falling. All right. And you're going to be seeing that we're making lower highs and lower lows. If we're in an uptrend, you're looking for buying opportunities. If we're in a downtrend, you're looking for what? Selling opportunities. All right. Literally, that's all you're doing. Let's say we're in an uptrend, right? Once you see that on the daily time frame, your next step is to go to the 4-hour chart. Now your question is the 4-hour chart also in an uptrend? If yes, you have confirmation. The daily is in an uptrend. The 4-hour is in an uptrend. Now what do? You've got a strong setup. Now, just for another quick validation, look at the 1-hour chart. Is the 1-hour chart also in an uptrend? If yes, that's triple confirmation. All 3 time frames are in an uptrend. This is the best setup. Now you wait for price to pull back on the 1-hour chart. When price pulls back to the previous low on the 1-hour chart, you enter without hesitation. Right? Once you're seeing those wick rejection, you're seeing the engulfing part, showing that support is being built here. This is how you find the pattern. Daily uptrend, 4-hour uptrend, 1-hour pullback. You trade. That's it. That's it. You trade. Don't look for too much things. It's that simple. Daily shows you the uptrend. 4-hour confirms the uptrend. 1-hour is where the pullback happens. And if you want to scale down to your lower time frame, you go execute. No hesitation. So before I finish, I've got to give you some common mistakes beginners make when it comes on to market structure and actually spotting these patterns. Mistake number 1. A lot of beginners trade against the structure. Right? They're told that when it's low, we buy. When it's high, we sell. Okay? And I think that's a big, big problem because you follow it too much. I don't believe in it because when the market is low, it can continue to go lower. And when the market is high, it can continue to go higher. How do you know what to do? It's based on what structure is actually dictating to you. You are not the controller or you are not the ruler of what price action does. So don't see a downtrend and dictate that it's time for you to buy because the market is too low. Don't do that because it doesn't work. Trade with structure, not against it. Mistake number 2. You don't wait for the pullback. You're not patient enough. You see the uptrend and you buy immediately, rushing in, rushing your entries, and not actually waiting on price to pull back to a key level. You buy at the high that rather than waiting on price to pull back for you to actually buy. That's a red flag. Yeah? Wait for the pullback. Mistake number 3. You don't use multi-time frame analysis. I just showed you how. So go ahead and use it now, right? You only look at one chart, but you don't look at the 4-hour. You don't look at the daily. You just stick to one time frame, and one time frame is not going to give you strong confirmation as to what price is actually doing, especially if you're on a lower time frame, and that's a fact. All right. So multi-time frame analysis helps a lot. All right. Don't trade against the bigger trend of the higher time frame. Always check multiple time frames. Mistake number 4, they move their stop loss, price goes against them, and of course they move their stop loss further and further and further away. This is a big mistake. Your stop loss is your stop loss. Don't move it. If you get stopped out, that's how it works. It's trading. You're gonna get stopped out. Don't move your stop loss. Market structure is the foundation of profitable trading. For you to be profitable, you've got to understand the structure. Structure is everything. So I need you to remember this. Higher highs and higher lows, that's an uptrend, we buy. Lower highs and lower lows, that's a downtrend, we sell. Find the pattern on multiple time frames, not just one. Wait for the pullback. Enter with your stop loss and your profit target and respect these numbers, right? That's it. If you want to master market structure and learn other profitable patterns, make sure to click the link in the description down below and join the Funded Trader Accelerator program that kickstarts March 1st so that you can understand how to become profitable way quicker than I did, right? We have a complete module on market structure, and literally we're not just giving you a course, we're going live with you. Link is in the description, and don't forget that the school link is also down below, and that community is free for all of you to join. Thanks so much for watching, and you're gonna wanna watch this video on multi-time frame analysis next. I'll see you as soon as you hit play.